Okay, very good morning. It's Tuesday the 15th of May. Hope you are well. Just give you an overview. We're going to look at a couple of corporate news that we've had this morning. Vodafone, the CEO stepping down. We've also got some German GDP data which disappointed this morning, so we'll have a look at that. And then we'll look at the day ahead. Focus on the UK today, wage data coming up at 9:30. Further talks with the Tory cabinet about the customs union, and that's going to be happening today. So pound in focus, and then I'll hand you over to Sam. He can look at the charts. He's back in the office after his cup-winning performance at the weekend, so I'll let the man himself deliver the technical assessment of the day. So that's what we're going to be looking at. Overall, though, the start to proceedings this morning fairly tame. I mean, yesterday was very much so a similar type of vein. We looked at the entirety of the economic calendar for the week, and it was already quite clearly evident that Monday was going to be relatively quiet from that perspective. Quite the opposite for today. Actually, today's probably the most intensive in terms of the scheduled events that are taking place, and we'll have a look at the economic data forthcoming, because it's not just the UK and wages in focus with that political customs union Brexit angle. There are other things as well at play. But this morning, relatively calm. Equity index futures in terms of the DAX just marginally lower, small gap down following a generally decline that we had overnight in the US equities and similarly in Asia overnight. But nothing really too much to spook the market, so to speak. And the currencies, dollar index relatively flat, and that's kind of been mimicked in the major currency pairs, which are down only marginally at this point in time. The one asset that I guess is already down a fairly decent amount this morning is gold. Gold already down about $6.50, so down towards an initial move in close proximity to that S1 before a bit of a bounce, and obviously finding a bit of support as well back toward that low point that we had on the morning of the 10th last week. But I'll leave that to Sam to discuss in more detail. So quick look at some of the headlines. Anyone trading the FTSE, I think it's just to be aware of, given that Vodafone is one of the biggest components of the index. Their shares have slid this morning. They're down circa 4%. Their CEO has stepped down, and the CEO had been in place for nearly 10 years. The CFO is essentially stepping into his shoes, so it's not a massive crisis, if you like, because the replacement has been overseeing the UK business, has been involved in other African, Middle Eastern and Asian Pacific units as well before, so seen as someone internally of credibility in that sense. But still, this wasn't a scheduled announcement, and so the shares are down, so it is worth noting that for the FTSE. Looking at the actual FTSE movers here, you can see then Vodafone, as a byproduct of that story, are the biggest loser this morning. But the FTSE as overall is holding up. You might have caught the news yesterday. There was a Supreme Court ruling in the US about the legalization of US sports gambling in the state of New Jersey, and that did see Paddy Power, William Hill, all those types of names rallying by almost double-digit percentages for some of them. But just having a look at other things that we've had this morning already. One thing is a quick word on Italy. I was just looking at the Italian-German 10-year spread in the fixed income market, and that's been tightening. This is for those not familiar with this kind of terminology, essentially you have the, let's say, country in focus, so in this case Italy, which has been prevalent because of the election situation with the hung parliament, and now the potential formation of a government between the Five-Star Movement and the far-right League, which seemingly is progressing. Now, political uncertainty or negativity tends to widen the spread, and what we've had this morning is the spread is tightening, and actually, in fact, it's the most tightest it's been in a week. So any political uncertainty that you might have thought that this combination of those two parties might have reflected in the market is very much being brushed aside, at least for the time being. Latest this morning is that those talks are still ongoing. They're asking for a few more days to kind of finalise the points of what their coalition government would be on various different policies, given they are quite far-reaching in some respects. So yeah, as we discussed yesterday, and I wrote in the strategy with Italy, I think the fact that the spread already been widening a little bit going into the event So a lot of this has already been pre-positioned, if you like, for this type of outcome. And then secondly, things like the five-star movement have kind of severely lessened their Eurosceptic kind of stance, if you like, in recent months gone by. And as such, this kind of threat of an immediate push to kind of exit Europe and all this type of thing is very much a distant conversation now to what it was possibly a year or two ago. So the market fairly sanguine about the situation for the time being. Okay, a few other things to have a look at. German GDP this morning. You might have caught that. It did come in a slight bit weaker than anticipated. Only a touch though. The quarter-on-quarter was 0.3%. Expectations were for 0.4, year-on-year 1.6. Against expected 1.8%. I mean, this is what it looks like here. Germany, the headlines are German economy slows more abruptly than expected. I did see a headline this morning talking about the fastest decline we've had in a year and a half. All these kind of negative headlines. But if you start reading between the lines, a couple of points here to be aware of that analysts are looking at. 2 points that some are suggesting explains the reason why there's been a bit of a slowdown in Germany. One's being an actual flu epidemic that's taken place. So obviously a net impact on productivity, and likewise there's been exceptionally cold weather over that specific period as well. So that's been touted as one of the reasons. And actually, if you start looking more, I guess, broader as to what some of the corporates are saying, kind of the feet on the ground, and actually there is some room for optimism about, despite this dip, that this isn't going to be a continuation of a negative trend. Well, for one, you've got Siemens. Last week, you'll remember they raised their outlook on their full-year earnings, so essentially they're very optimistic about the forthcoming future. Heidelberg Cement, so certainly when anything's tied to the sector of construction, then certainly there has to be appetite for economic growth for that stock to be in vogue, so to speak. And Heidelberg Cement said recently that the economic upswing will boost construction activity, so they're also positive. And then you've had the German Bundesbank, so the national kind of central bank, stating that they remain optimistic on what has been record orders for the country, and that they anticipate for the coming months. So hence the reason why I'd say the market is not really spooked this morning. You're not seeing negative euro or the DAX selling off or the Bund rallying, anything like that, because the analysts know, and the traders likewise, that this is nothing to be worried about as yet. To be monitored at this point, but nothing to severely alter your perception about what has been a little bit of a slowdown in Germany, but ultimately we expect to pick up in time in the months ahead. A few other things then, just to round off the news. We've got further commentary about the UK. You might remember at the weekend and in yesterday's briefing, I was talking about a report in the weekend's Independent newspaper, whose sources talked about a potential rumours in Brussels about the EU might favour an additional 6-month extension to the existing transitional deal due to end in 2020. Now, we've had basically Bloomberg run their stories and sources overnight, and it's pretty much in fitting, but this side or this time from people familiar with the British position saying essentially the same thing. Extending the UK's transitional customs arrangements with the EU could be a way to resolve this obviously thorny issue of that on the Northern Irish border and the customs union. On this side of things, of course, we do have Theresa May meeting with her cabinet. I don't have a set time for when those talks are due to begin, but as soon as I do have more concrete information on that front, I'll of course let you know. One would think that they'd be talking usually throughout the morning, and then some kind of speech or PM spokesman will speak later on this afternoon. So it could be worth keeping an eye on Twitter and obviously an ear on the squawk for any breaking news on that regard. Will it move the market? Well, my net expectation is that they're not going to come up with any grand solution today. So I don't think there's going to be an episode of an immediate buy or sell moment for cable. But certainly we're kind of monitoring the evolution of these talks, which is ultimately critical for the pound in terms of the political aspects of near-term directions. So definitely something to just keep an eye on. Looking at the calendar though for today, it is a fairly busy one. As I said, you've already had German GDP. That's kind of gone now. So now we look towards 9:30, and although we get the claimant count, unemployment change, the ILO unemployment rate, well, let me just show you this. This is the UK unemployment had fallen to 4.2%, first time since 1975. Unemployment, as we've discussed before, really is not a big issue in the UK comparative to the historical levels. I mean, if you look down to where we were in the years before the financial crisis, we were only at about 4.5%. So we're well below that figure. And as you can see in this chart, you've got to go all the way back and to the left to the kind of mid-70s, the last time there was this many people employed. However, as we know, this isn't really the main issue, because under circumstances of high inflation and low wages, the consumer has been squeezed and wages haven't really materially recovered post-financial crisis. Now, the period that we're in now is quite interesting because, as we know, inflation's been coming off and wages have been going up. And what we've been seeing then is this. And average earnings growth last time round outstripped inflation for the first time in a year. So you can see the wage, which is the red. You can see here how you've had quite a divergence that really materialized at the end of Q1 of last year, where inflation shot up to, as we know, 3.1% high of 2017. But wages weren't rising as quickly. However, in the last kind of 2 months, we've seen notably this now go back into real wage growth in that sense, which is a positive in terms of alleviating some of the pressure on the consumer. So what's going to be key then is we've had the Bank of England hold fire on raising interest rates. They've also been particularly kind of active in reevaluating their perception of inflation and reforecasting it to the downside. Then we've had the weaker data, dovish commentary then from the Bank of England, and as such, consequently, the last few weeks the pound has continued to decline. What's going to be interesting now is if wages come out higher than expected, then given the pound's been so beaten down, is this going to be the kind of catalyst to just prompt some of those to want to get long again, with the expectation that ultimately this is the precursor then to, yes, inflation has been dipping, but the kind of the speed of which it's declined is going to gradually slow considerably as wage growth starts to pick up and demand starts to pick up as a consequence. So I think this wage data is definitely going to be interesting when it comes out, and that's going to be at 9:30 for sterling. Otherwise, you've got German ZEW. Not that I think that that's going to move European assets, but I guess it's definitely worth keeping an eye on. You've also got, at the same time, the flash estimate for Q1 GDP of the Eurozone. Obviously, we've had Germany come out, touch weaker than expected earlier this morning, they being the biggest contributor to European economic growth. So maybe the market's already kind of built this in terms of ahead of this figure. So 10 o'clock, definitely I'd be keeping your wits about you. 2 economic data points coming out. Later on into the afternoon, we get a US spin, retail sales. This obviously is classified typically as a tier 1 release, and so likewise I'd approach that with some caution in terms of your strategy making for this afternoon. Certainly would want to see how that data comes out before making any kind of brash decisions about the performance of the US session to come. That will lead us then into the open on Wall Street for cash equities. A couple of other things this afternoon, but I'd say this later data at 3 p.m. is nothing too much of great significance. Business inventories, housing market data, and then the API inventories coming out for crude traders later on in the evening. Moving on to the speakers, we've got a few to look out for this afternoon, mainly Fed's Kaplan, but is a non-voter, giving a speech on the economy, which could be quite interesting, and also the energy market. And just given the energy prices at the moment in crude, WTI obviously trading a 71 handle this morning, it would be quite interesting to see what the Fed thinks about energy prices at around these levels. the recent price rises that we've had, just given the overall focus on inflation from the Federal Reserve. Okay, that's it from me. So I'm going to hand you over to Sam, and then he can talk over the charts a bit more detail, but obviously I'll be in the chat room throughout the day. Any questions, feel free to drop me a line. Have a good day.
Hi guys, good morning. Just have a quick look over the charts, although just before we go into currencies, just going to bring oil into the picture here. Is it's just having a bit of a move off, recently off the pivot, having broken through it, and we're just now above $71 on the futures again, just going up to the upside there, that sort of morning high that we had around 4:30 in the Asian session there. Just keep an eye on that there for oil, just having a bit of a bounce, as is gasoline. Moving over to the currency pairs and coming back obviously after being away yesterday. Let's just have a quick look. Let me just refresh this chart, and where we had, and you can see here going back to the 18th of last month, it was pretty much one directional until maybe the last sort of 4 or 5 trading days, where we're starting to get almost a bit of confusion in the market. The dollar yesterday swinging both high and low and back and forth, and I think overall direction at the moment is going to be rather tricky. I think if we lower the time frame down, you can see yesterday we went higher to come lower, but overall direction is down. But are we now starting to suddenly see a bit of a reversal, bit of profit taking? I mean, technically, looking at the pivot, not too bad as an area to potentially go short with the resistance of that pivot level, and then also the morning support that we broke through. I don't really mind that too much, but I think the trade I prefer the most being R1, and you've got yesterday's sort of afternoon's high just around there with the R1. Not a bad place at all to look to go short. I know to get through there the pivot would have to break, and also the decent area of resistance around here on the futures as well, 119.90. But I feel I would only prefer this just a bit higher up, all things considered. If we do get a break of S1, you've got then the low from Friday also in the mix that you'd want to be aware of. I think just better to sort of wait and see for these currency markets at the moment, having been on such a consistent run to the downside with the dollar strength, and in this case a bit of euro weakness as well. Might just be worth not coming into the markets with a definite bias for now, whereas the last couple of weeks it was all well and good sort of looking to consistently look for that short. And same with the pound. You can see from the back end, the middle to back end of April, you can see it was one directional and then just sort of going sideways a bit now, and you can see just how choppy that this market has been now. Let's bring that into picture above the camera. So overall direction for the pound I've got written down unsure. I think if we were to come back up to the highs of yesterday, I would like the short, so using all these sort of resistance points along with the R1, perhaps preferring maybe actually yesterday's high, and then you can always target the R1 as the trade, just coming towards the lower points of the day, and Friday afternoon's low is just above the S1, so just below where we're trading now. I think you could find a bit of support around here, but I think in terms of euro and pound, short higher up would be the sort of the go-to plan. If we were to get weak data from the UK in what we've got just about 40 minutes time, then look for the direction to continue for the rest of the day or whatnot. But for now, I think preferring to go short higher up. Aussie dollar, I like the look of just above the pivot. I've got written down as the sort of my favourite trade for the day. For that, you've got the high of the day, you've got the pivot, you've got yesterday morning's lows, all around that sort of area. Do I think we'll get there? Not necessarily. The previous low of the morning has held quite well, as resistance was also the low of Friday as well, so that could still well be a good point where this market still looks to come back down from. Today's S1 not far away from the low of Friday afternoon, so I would expect some support around that. Also the round number of 7,500. So Aussie dollar bit in this range as well. You're seeing the dollar just sort of coming off its better levels that it has been on for a while, a bit undecided, maybe better to sort of wait and see, I think, for these markets, albeit those three I do prefer the short higher up, but more maybe a wait and see approach going forward. Dollar yen, another test this morning of that multi-week high. Let's just draw that up. You had a couple of sort of false breaks of that level. You also got the R1. It might well be that this trade is something you're looking at later in the week. Another sort of push lower may happen, and you can then get these lows consistently sort of getting higher. Price gets squeezed in, and then you get the breakthrough. In terms of where we are overall in the grand scheme of things for this market, let me just put this onto a daily, and you can see if we do get above these multi-week highs, we're looking back now at levels seen from the 5th of February, so when we really started to sort of have that down push in equity markets, and obviously the yen started to strengthen there as well. Push through there, and then, you know, I think this would be the main target where we really did start that push from the 2nd of Feb. Wait and see, I think, for the dollar yen. I'd expect another sort of push down from here. Hopefully price gets squeezed in, and maybe in a couple of days or hours or whatever, you get that further push on after another sort of failed move to push lower here. As mentioned, oil, just put the pivots back on, just pushing higher from that pivot in the last few minutes or so, just finding a bit of resistance there. Now we'd have this trend line on for oil that I've got marked up. Let me just bring this into picture using the previous sort of highs of last few trading sessions. Haven't quite made it to there yet. You've also got this trend line from yesterday's highs, which has been respected quite well for now, so I'll be keeping an eye on those going forward if we are to get perhaps another push to the upside. But you can see again this market, which had been trending quite nicely, is now starting just to get a bit more confused about the overall direction, and it might be a case of sort of waiting for API and DOE perhaps for a further push in either direction. But I would definitely have this trend line on going forward. I think it would be an interesting one if we get a break of that push through yesterday's high, and R1 and the highs from Friday match up quite nicely. It's a decent sort of profit area of resistance as well. Moving over to T-notes, lowest we've been again for quite some time. Here on the futures, you can see we're almost getting a test of the year low that we made back at the back end of April as well. While I don't necessarily think we'll get to the pivot, that would be my area to look to go short for T-notes if we were to. Also taking into consideration the low that we had yesterday evening, overnight, potentially for a push down as well. But you can see yesterday was quite technical. Every time we sort of got a push lower, we did come back to test it, and then continued that sort of directional move to the downside. You can see it breaks through, then made a new low, found support, resistance once broken, and you can see perhaps maybe we look to come back to test that area to continue the overall direction for this market. Equities, bit more confusing again. Last week was really nice for equities, obviously the FTSE in general, but US equities here just near their lows, having bounced off that S1. Probably wait to see again for this market. I don't have an overall directional bias for the week as it stands. Pivot, I would expect some decent resistance. You had good support there yesterday before breaking through, and today's highs arrived just around that pivot point as well. So that would be the key sort of level for me. I think to the downside, Friday's lows, you've got S1s, you've got Thursday sort of overnight low as well. I think that sort of area would be a good place to perhaps to look to go long. But for now, as with most of the market, I think just a wait and see approach. Obviously the UK data could lead the pound and FTSE at 9:30, but for the Dow, S&P and the Nasdaq, I prefer just to wait and see how those pivots play out if we do get there, perhaps later on in the day. Looking over at the FTSE, let me just put this on a larger time frame. You can see just how strong this move has been since the back end of March. Obviously the UK data at 9:30 has the power to sort of override this bad data, and I think we'll get a break of last week's highs, which match up quite nicely with the R1. really strong data, strong for the pound, and you can see the FTSE perhaps weaken, and then you're going to break the lows of today, Friday, Thursday, around today's S1. So in a nice range, and I expect if we were to sort of come out the back end of the range or the high end of the range for the expected data release, we could get a break of the range in FTSE here and here. So definitely a market to pay attention to there, as we're just finding a bit of support now at the pivot. But for the pound as well, I think better just to hold off until that data release as well. As you can see, that's just coming back down to test the S1 area. Gasoline just pushing on. As you can see here, not too far away from the highs that we made yesterday, that double top. With that, keep an eye on oil, which is just trying to come to its higher point that we made about 10-15 minutes ago. So keep an eye on here, $71 in oil getting tested. Key levels of resistance from the morning, not too far away. Gasoline extending to the highest it's been for quite some time as well. Any questions, please do get them in the chat, and also we'll do a quick rundown before the data at 9:30. I hope you all have a good trading day, and any questions, please do get them in the chat, as you're just seeing the oil following gasoline and pushing above that resistance point.